Hello everyone, how's everyone doing? Hope everyone's having a good Friday. To me, this Friday is a part of my weekend as I'm not going to be trading on Friday, Saturday, and Sunday, obviously. And Monday and Tuesday is also off for me. Those are just days that I have crossed out of my economic calendar since those days I will not be participating in any sort of trading. So today we're going to be reviewing Thursday, May 22. Uh, I did not review May 19 and May 18 for the same reason as I'm not going to review Friday and um, Monday and Tuesday next week. Just because I'm not going to be trading those days. And if there is anything that does happen on those days that I think is worth talking about or worth kind of adding to our playlist of how price has been moving and what we can expect further on, I will. This playlist has been helping me tremendously, especially in connecting the days together, uh, how I can use the data, especially on the daily, to form intraday outlooks. So as always, information should not be considered an offer or enticement to buy, sell, or trade. Here we have the Nasdaq June contract 2025 daily chart, and here the latest candle is the Thursday, May 22 candle. And if you guys notice, I have this little symbol here, which means that I'm using a replay to cut back one candle, just so I can give you guys a clearer look on how the day closed, because it is currently Friday. The time is around 10:34 a.m. Eastern time. So yeah, when I'm trying to make these videos, I use a replay most of the time just so I can get a cleaner look on the charts and just focus on what needs to be focused on. So after Wednesday, this big drop lower that put us back beneath this low here. You guys remember when we took this low, we were really anticipating that it would um, hold as a turtle soup and start to work the levels higher and then eventually reach this high here, which this is a mediation block. And we had this high drawn on as a draw liquidity, which was, we thought that it would be traded towards to after the soup. But once we returned back to this 0.25 level and then we start trade lower, our expectations kind of shifted. So the main thing is I want to have highlighted here is generally the image rebalancing that we had here and the consequent encroachment of this wick, which I don't have drawn on in this screenshot, but it will be visible in the other screenshots. Now, the main consensus that we had within this drop lower is that if price had true willingness to start to reverse and start to trade lower, even if it is for a momentary time being, we would expect price to spend more time at the lows, breaking down beneath each low and continuing to drop through it, like we did here. You see we have a low here, broke through it, drop through it again, we had another low that would drop through again. So using that, we were able to form a kind of scenario-based scenario A and scenario B for today. And if you look in the top left, you see this is May 22, 9:04 UTC -4, which is Eastern time. And you see that we had two scenarios shape up. This was before the rebalancing that we had on the previous slide took place. We have the possibility of price reaching into the immediate rebalance using discount wick as a level of support to take us there. And once we reach that, we would have lower time frame assessment to understand what would price likely do after reaching the level, or we would just rely on price trading and giving us our answer. And the second scenario is if price uses discount wick as a point of manipulation, and then from there starts to trade lower. and then obviously we want to reassess after we take the day's low. But those were the two scenarios I placed out, and however they play out, the manipulation points would likely be at 9:30. So here, as we move on to the hourly, this is after the fact that we drew out the previous speculations. We see that at 9:30, price shot higher. 10 o'clock opened, we reached into the rebalance, and then we started to trade lower, discount wick, and then from there we kind of bounced around these arrays where we were touching the immediate rebalance and the discount wick, and then where we eventually closed off with this final hour displacement here that closed us just above the discount wick. So the thing that you want to consider when you are previous to 9:30 is where could be the possible points of manipulation. So when I first got onto the charts and saw that we had this candle at 7 a.m. that dropped lower, and following 8 a.m. where this low was taken here, we would want to consider two scenarios with any highs or low being taken. Actually, not only highs or lows, but even inefficiencies. So as price took this low, I asked myself, is this likely to be a turtle soup where we would have a move higher and reach back up into a premium? Or would this be a market shift and would we continue to push through this low using a 9:30 manipulation? Now, obviously, this isn't visible here, but we will implement some of Friday's trading, which has already occurred since it's 10:30 a.m. Eastern Time, and we will see how it actually played out and whether the run on this low here was a third soup or if it was a market shift. Anyway, asking yourself the question of is this a market shift or third soup is very important because it allows you to get a decent grasp on what you expect price to do if one of the scenarios were to take place. So you see, after we took that low, we started to trade higher. The respect of the immediate rebalance really hinted at the fact that this might have been a minor retracement before, possibly pushing through the low as a market shift. And especially with the final hour close that just ran through this level, that would be extra, obviously, it's extra evidence collected towards it being a market shift. Another thing that I want to point out on the hourly chart is this candle right here. This was the final hour candle of Wednesday's trading, and it's not visible here, but I think if I go on the previous slide, it will be visible. Yes. So this low here, the final hour reached that low and then started to dig through it, and then from there, a third soup on this low here, which is viable sometimes in cases where we have a low that gets souped twice and then it still gets treated as a soup. That does happen sometimes. It's a very possible scenario. But the fact that it happened before, the weekly chart hasn't even closed, hasn't even formed us a BC that we could use to tap into with this move lower. It was a little bit off-putting to me, and I didn't consider it as a third soup yet. But generally what I'm saying here is that the main question is the run on this low going to be a total soup, or is it going to be a market shift? And then we have two premium arrays to back this thinking up and to provide us with evidence on what it will do by using reassessment on lower time frames. So again, you have the scenario where we use discount wick to manipulate towards and then push through and market shift beneath the low, or we would use discount wick as a support array, deliver to immediate rebalancing, and then from there, either we shoot through the candle and engulf it all of it, and just run through the candle, or we would use the immediate rebalancing as a point of reversal. And obviously, in hindsight, we can see that price was very accumulating, or accumulating. I'm not sure that's a word, but you can see that we ping-ponged from the discount wick to the immediate rebalance. But what counts is how we closed and how we continue to trade on Friday. Another thing that would support us having a kind of shift lower would be that we had these lows from May 13th, and this first presented for value gap from May 13th that was not yet filled, and we had low hanging fruit perfect equal lows, and then we have relative lows on the side. Actually, on this day, I remember this day pretty clearly. I'm pretty sure that we reviewed this day. Um, we had these lows marked out as a point of manipulation for 930. We would have wanted to see 930 to push lower and take these lows and then start to head higher, but instead it just opened and started to trade higher. Now, moving on to the 15 minute, just an important array that I want to talk about and how my thinking was developing during this day was we had this high here that was in pre-market that was formed within this 15-minute gap that I have here drawn on in yellow. And notice how as 930 opened up, we dropped lower, we filled the opening range gap, we also touched this discounted fair value gap, and then from there we shot through that level, and this level here, this high, was kind of a anchor point where it was a pivotal high in deciding whether we would reach into the immediate rebalance or use the discount wick, which that's the red line here, to bring us lower. So you see how that kind of connects with the bigger idea. It gives us more framework. It gives us more kind of gives us a better grip on the situation. It tells us if we do reverse from taking this high, then we will not see the immediate rebalance, and then we would have respected the discount wick, and then from there we would reach lower, probably filling the opening range gap again. If we do not reverse from this high and we push through it, then we can start to shape a scenario where we would more likely, reach for a immediate rebalance. And then from whatever happens there, um, that's just up to price. But let's talk about what did happen. So we pushed through the high, closed through the fair value gap, and then from there we obviously mid rebalanced. Then we kind of accumulated up until near off the close, where we went back higher, took this high, and then during the final hour we dropped lower, and we closed just above the discount. Okay, now finally, moving into the 1 minute time frame. So the main thing that I want to focus on here is the 9:50 to 10:10 Eastern Time and macro. So just to familiarize you with all around on the screen right now, obviously we have that open. We have the first presented fair value gap, which did not have that much of a role within this day. We also have the opening range gap high, which was the opening at 9:30, and then we have opening range gap low, which is a close at 4:14. The close at that price on the previous day. And we have the immediate rebalancing, and also the 15-minute array that we had talked about, and also the discount wick. So as 9:30 opened up, as we said previously, we traded lower, and then up until we reached 9:50, it was all just an accumulation within the first interruption. When 9:50 started, we got this spooling sort of price action that reached all the way higher up until 10:10, where it started to reverse and move low. Now, I really want you to think about this. 9:50 to 10:10. Let's split that up to two parts, from 9:50 to 10, and then from 10 to 10:10. 9:50 to 10, consider an hourly candle. The hourly candle's anatomy is comprised of an open, a manipulation point, let's say, for example, for a bearish candle, we have a low, and then we have a close that's a bit higher than the low. Now, obviously, this is not 100%, but look at any candle. I'm gonna pick any random candle. So look, we have a open, have a manipulation, we have a low, then we have a close, which is a bit higher than the low. Now, think about it in this way. In the last 10 minutes of the 9:50 hourly candle, if our drawn liquidity was to move lower, then what would the first 10 minutes of 9:50 to 10:10 do? Obviously, it would retrace higher because it's going to close higher than its low. And then for the first 10 minutes of the 10 a.m. candle, what is it going to do? It's going to manipulate. Where is it going to manipulate? If we have our jaw lower, it's going to manipulate higher. So here, 9:50 to 10, which is right around here, you see that we have a move higher. Then we have a small retrace, and then in the first 10 minutes of the 10 a.m. candle, to 10:10 obviously, we also have another manipulation move higher, which consequently manipulates into the immediate rebalancing. And I say consequently, um, holding my two fingers up. So this concept was introduced to me by someone called Aidenomics. I was in his Discord server for pretty much a while. I decided to leave it because I want to take my own route, and I was just getting too distracted with the things that were going on there. I wanted to focus on my model and just be alone within this journey. Um, and this concept is called the Axis macro. If you guys are interested, send me a comment, and I'll send you the screenshot that I have that I created personally on the it's kind of a schematic that I have drawn out on how this concept is kind of applied. And what this did, it just helped me frame the idea that we were gonna eventually draw lower. We will move into the um, final draw that happened on this Friday later. But you see how the 9:10, 9:10 a.m. Ishtar macro, instead of drawing towards drawn liquidity, where in this case it was lower, we actually instead um, retraced. And when you think about it on an hourly basis, that's how it kind of makes sense. The first 10 minutes will close higher because the candle did close lower. And then the first 10 minutes of the new opening candle will be manipulation for the 10 a.m. candle if it wants to close lower as well. Now, just to keep you guys filled in on what happened during the afternoon session to hit the mid rebalancing, it was all kind of just a bunch of accumulation. It is tradable price action, but it's not something that I want to be touching. But you see that we had this PM opening range for value gap that took us higher, that created the immediate rebalancing high, and we spent some time there, eventually until the final hour where we dropped lower, retraced, had this big wick higher that stopped at the consequent coordinate of the opening range gap. Look at that, that's perfect. Dropped lower, back into the first immediate value gap, and then we closed within that 15-minute gap. Now here we are, May 23, 10:53 a.m. UTC-4 Eastern Time. Notice all of the arrays that we had highlighted previously on the second slide or third slide. Third slide, I'm pretty sure. We're taking the equal lows, related equal lows, and then this puts us back into the 20,818 level, which we will talk about more in the next slide. And also the first been the provided gap May 13th that was not filled is now filled. But for the AM price action, I don't see much going on. Again, if I do see something at the end of the day, I'll be sure to upload the video either later today or during the weekend. So here we are back on the daily chart, and this is actually a screenshot from my Notion journal that I had posted as a kind of like note that I want to keep on for the following day, which was Thursday. So what you see here is May 21, 2025, 14:56 UTC-4. So this was approaching the final hour of trading, and this low here was in my sights. That's obviously the low that we had the question of are we going to soup or are we going to market shift through it. But the main point that I want to keep in mind here is that I wrote down when I took this screenshot, if we start to spend more time at the lows and start to use the inverse SIBI, which was this blue gap here, as a reclaimed SIBI, which is basically trading through it and then trading back into it and then using it as a SIBI, then expecting the premium gap to be filled is on the table and speculation for higher jaws is off the table. Now, what I meant here is instead of premium gap, I actually meant to say discounting gap, which is this gap here. But basically what I'm saying here is that if we do breach the slope and if we do spend so much time at it, if we do accumulate at it, then obviously what would that mean? That would mean that we're going to be seeking a more discounted array. Since these arrays are not holding price higher, it makes sense logically to expect a more discounted way to seek gunpowder to trade higher, or just to seek a draw to it to maybe trade through it. Obviously, we have no kind of knowledge of that. I can't tell the future, but I just know that if we do um, spend more time in this level, especially at the 0.25 quadrant, and we don't find um, resistance off of that level, then we're going to be reaching for more discounted rates. And if we do reach for this gap here, I also wrote this down, but I don't have a screenshot of it. Um, we said that if price does reach into this gap, we reach a point of kind of, we just stagnate around. We wouldn't do much. We would kind of get a situation where we would be accumulating and get a little less price action. That was like how we had on the previous 2 weeks, where it was kind of volatile and had some action to it. So reaching into this gap would mean that higher draws and speculation for higher draws gets off the table. And now moving into the future, today it's 23:11 a.m. We have reached into that gap. This was the level that I was talking about on the slide before, the one that we were on, the 20,818 level. That was the high of this gap. And if price starts to spend more time at this level here and fails to reject from it almost immediately, then obviously what can we expect? You can start to expect the 20,622 level, which is the daily range equilibrium from there's a swing low down here towards this high. That's it for this video. That was a mouthful. But I hope you all enjoyed this. I hope you all learned something insightful. And until next time, Lord willing, be safe.